Fears of a global recession, especially in the US and Europe, are mounting by the day. Yet, analysts expect Indian IT companies to post steady performance for the April-June quarter. IT major TCS, for instance, may report modest revenue growth later today, led by seasonal strength and robust digital transformation projects.
We are expecting TCS is likely to report 3.4% of the revenue growth momentum in the rupee terms. However, the demand scenario is likely to remain intact and strong because of this robust demand across the services like cloudification of the data, IoT, and data analytics and other next-gen services. However, the margins are likely to remain under pressure. We are expecting 80 to 100 basis point of the margin depreciation in Q1 FY23, which likely to be stood at 24.4 to 24.9%.
Not just TCS, but the entire industry is expected to see the long-standing pain of margin decline due to unabated supply chain pressures, as per experts. Besides, they believe quarterly revenue growth may have varied for companies due to seasonal factors.
Indian IT sector is expected to report a steady quarter with robust revenue growth for some companies led by strong seasonality, while some companies would clock modest growth due to seasonal weakness and pressure in certain business segments. We expect strong organic constant currency revenue growth from Infosys and TCS, while revenue growth of Wipro, HCLTech, and Tech Mahindra will be impacted by weak seasonality. EBIT margin is expected to decline sequentially in Q1 owing to wage revision, visa costs, increased travel expenses, and retention expenses. Though these headwinds would be partially offset by higher utilization and currency tailwinds.
Kotak Institutional Equities pegs revenue growth on yearly basis to range from 2 to 4.5% for Tier 1 and 3 to 5% for mid-tier companies. EBIT margins, meanwhile, could decline 70 to 400 bps year-on-year. That said, despite a strong near-term demand outlook, analysts caution that risks to long-term growth have increased significantly. Analysts at Motilal Oswal anticipate the impact to be felt in the second half of FY23 and in FY24. The brokerage has trimmed its FY23 and FY24 EPS estimate for the sector by 2 to 5%, despite a positive 300 to 400 bps impact from weaker rupee. On the bourses, market experts believe that related stocks haven't completely priced in a recessionary environment. According to Motilal Oswal, near-term pressure on valuations will continue as the worsening macro commentary is likely to impact industry deal flow and revenue over the next few quarters. However, it suggests investors utilize any consequent correction to raise allocation to the sector. Apart from corporate earnings, investors will monitor the US employment data for market trajectory today.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
तुम इतना डर गए?
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.